everyone. Welcome to today's webinar. My name is Connor Spencer. Today we'll be discussing essential strategic planning for the new financial year. Very exciting. So I've launched a poll. If you do have 30 seconds to answer that, we'd really appreciate it. Actually, your answers actually allow us to tailor potential further content to businesses just like yours. Allows us to see as well what we potentially want to introduce brand new down the track. If you guys do have any questions, you'll see we have a general chat box, but there's actually a separate one for Q&A. Molly will be taking questions at the end, so do drop them in there. Obviously, if it's relevant to the topic, that's absolutely fine. But if we don't have many questions, then we're quite into the group today with 24 participants. For free to ask maybe a different question on different legal matter if there's anything you're facing at the moment for your business. So in today's webinar, obviously we'll cover a bit about Lawpath. See, some of you already subscribed to us, so there won't be much new information there. I'll introduce obviously Molly. Molly's joining us for her second webinar. We had some great feedback on her first, which was fantastic. And then we're going to go obviously to the top legal matters to consider for this new financial year. Specifically, we'll reflect on your business structure, your intellectual property, review of workplace policies, which is quite essential. We'll have a look at that. It's very interesting, 24-25 federal budget. Look at unpaid debts, superannuation, review of award weights, and then of course a bit more on planning ahead and organising records. So some of you on this call, obviously you might be at the very beginning of your business journey. July is actually the biggest month of the year for brand new registrations or for people actually adapting their current legal structure, their existing business. So perhaps you've been operating for a few years now, but either way, this webinar is perfect for you. I'll have a few more tips, a few basics around compliance, and fill you in obviously on any recent or upcoming changes for this financial year. So we'll go through a few changes during this period. If you're quite detailed onto it, like myself, if you need lists, if you have formatted documents, spreadsheets of what you've done, what's the progress, what's coming up, this webinar is also for you. We've got an exclusive offer on our legal and accounting services. I don't know if anyone's checked. If you're already an existing subscriber, we've got some opportunities to actually upgrade your plans and discounts just for you, and also some new bundle options as well, which I'll cover later on. So a bit on Molly. Molly is one of our commercial and business lawyers that you can speak to on our legal advice plan. I'll provide the link in the chat where you can actually see all of our internal lawyers. There you can see Molly's profile. You can see she has extensive experience in startup law, trademarks law, e-com law, privacy law, trust law, to name but a few. And if you do actually want to click on her profile as well, you can see she has nothing but 5 stars for client reviews, which is always good. So if there's anything actually you want to discuss in today's webinar specifically with Molly, please get in touch. My email is actually listed in the chat box there. If you want to reach me or for a demo of the platform, you can reach me. Otherwise, I don't know if you actually want to share your email, Molly, as well, directly to you. All right, so just real quick then, so for those of you who are new to Lawpath, we're an Australian-based online digital legal platform. We've been in business for 10 years now. We've helped over 500,000 small and medium businesses at various different capacities in that time frame. We are built for startups who need that sort of legal and accounting services at a fraction of the cost compared to the traditional legal service. And over that time, as I mentioned, we've actually saved over 100 million in legal fees for small businesses, and we have actually one of Australia's largest network now of lawyers and firms on our platform, including accountants. About 8,000 of the 12,000 registered accountants in Australia actually use Lawpath. So if you do have an accountant, especially if they've actually registered your business, good chance they've actually used Lawpath to do so. Also in the chat, you can actually see some quick video testimonials from our existing clients. We may have businesses just like yours, so definitely hear it from them, check it out from them. But if you actually already subscribe to us, we do offer that to clients using the advice plans. So if you would kind of like a bit of free marketing, talk about Lawpath or advertise your business, feel free to reach out to me if you would like some more information on that. So we've got a fair bit to cover. I'll jump right in and I'll hand things over to Molly. Thanks, Mark.
Oh, thanks, Connor. And nice to have you guys all here for lunchtime, learning about getting on top of things for the start of the new financial year. Like Connor said, we've got a bit to go through today, and a great place to start is reflecting on your business structure. So I know that you guys have been answering in the chat about what business structure you have if you've set up a business. And I guess today we'll run over some of the key business structures, common business structures, and pros and cons of each. So you're likely familiar with the four that we've got up here: sole trader, partnership, company, and trust. Taking us across here. So a sole trader is it's basically just yourself operating a business. So it's one person operating a business, not setting up a company, registering an ABN as a sole trader. Then we've got partnerships, same thing, easy to set up, easy to operate, but with two or more people. So a partnership between people, self-explanatory. And we've got proprietary limited company, PTY LTDs, and we'll jump into those a bit more later on, and also trust. So I put it all up here on a table because it can be a bit to digest about the pros and cons between them. But sole traders, simple to set up. The owner has full control and all profits go to the owner. However, the owner is personally liable for debts and obligations. Same with partnership. You've got shared responsibilities and skills, combined resources, and the partners, whether that's two or more people, are jointly liable for debts and obligations. Alternatively, a proprietary limited company, this is limited liability for shareholders, which is really important there. So with the sole trader and partnership, you're fully liable for debts and obligations, whereas as a shareholder, your liability is limited. This gives you a greater access to capital, having a company, and potentially more tax effective. And because of that limited liability for shareholders aspect, it also can make your business more attractive to investors. Downside is that there is more regulatory requirements, but like it says here, potentially more tax effective. And then we've also got trusts. So operating your business through a trust or owning your shares through a trust can access to more flexible income distribution, potential tax benefits, and also asset protection. With trusts, they can be more complex to establish and manage, but ultimately, depending on the structure that you go for, can offer great personal asset protection by separating your commercial liabilities from your personal assets, as well as the tax advantages that can be available. So this here is kind of the gold star business structure for a scaling and growing business. And you can see here it's got the trust element that I touched on about owning shares in a company with your trust, but we've also got a dual company structure here. So what this means is that you've got two companies set up. The trading company is the company that trades and operates. It's owned fully by the holding company. So the only shareholder in the trading company is the holding company. The holding company is where all of your value sits. So your assets, your intellectual property, investment. And then above that holding company, that's where the shareholders sit. So investors, founders, whoever the shareholders are, will typically own shares in the holding company, and then holding company owns the operating company. The reason that this is a great structure, especially if you've got either high value or high risk in your business, is by having those two entities, it's keeping the value and risk separate. So where it says here, license agreement with PPSR, what it's referring to there is that say you had an app and all of your intellectual property of the app was all sitting in the holding company, protected away from any risks. So the trading company would be the company that entered contracts, hired employees, engaged contractors. So you've got that level of separation. By having a license agreement with a security interest registered between the two. So what that means is that the holding company owns the app and the software, the intellectual property, it would license to the operating company so that the operating company can access and use that. And then under this agreement, the holding company would also have a security interest registered over that intellectual property. What that means is that if something goes wrong at the trading level, which is where we're entering all of our risks, so our contracts, where we could possibly get sued at this level, it means that our intellectual property is protected from any of that debt collection or any risk there with those contracts. And this is something that you can sort of decide when the right time is to adopt this full structure. And it's definitely achievable to start with one proprietary limited company acting as operating and holding company all in one. There's a little bit more involved in terms of additional steps to make sure that we appropriately separate the IP if and when you want to adopt this dual structure. But if you're not ready to do it right off the bat, then it's definitely something that we can work towards in the future. But I think the key thing to keep in the back of your mind is those two aspects of value and risk. So maybe you've had your company set up and it's you have been entering in low value contracts. Maybe you don't have a lot of assets that you're worried about protecting just yet. But maybe you're coming up to a contract that's worth its significant value, or you've developed valuable IP. It would be those sorts of things that you start to think about for the trigger point to adopt that dual structure. And having the family trust holding your shares in the company as well, that is a way for you to again separate your personal assets, protect them from your commercial liabilities, as well as access tax benefits that might be available if you have more control about distributing your income from the company. Cool. And here's some, and I think you guys will have access to the slides after this as well. So this is sort of the considerations that some of which we've already been through about what you might be thinking about when deciding what the right structure is for you. So right there at the top, it's about that risk and value, thinking if your personal assets or commercial assets, is there a risk if something goes wrong, and what kind of risk is in your business? When we're thinking about hiring employees or contractors, wanting to do that through a company, and again, thinking about whether it would be better suited that we have that dual structure and engage them at the operating company level, and therefore keeping the risk at that entity. Considering things like how much income and cash will be within the business, and also about splitting your income with family members. So that's in relation to holding your shares in a trust. So thinking about if I did set up a trust and wanted to be strategic about how I distributed the income and the benefit that I received from the company, who would I share that with? If I got a family member, a partner, a neighbor, a friend, whoever it is that you might like to split that income with. And yeah, thinking about how much profit there is or expected to be in the business. And those sorts of things you can ask yourself, and also check in with us about your specific situations as well, about finding when the right time is to adopt that gold star standard, and or if maybe it isn't best suited for you and you're happy to tick along with one company. Cool. So in terms of intellectual property, we're going to go through the main different types of IP and how you can protect it. But just to give an overview of what intellectual property is, it's one of those ones that if you ask, we all know what intellectual property is, but it's hard to explain and describe. So here we've got some examples. So IP can be the name of your business, trademarks, copyright, and it's basically an asset of your company or business that's intangible. So if you're starting a business or a company, it's the first idea you have. Or perhaps it's the technology you're developing, or perhaps it's the company procedures and policies, trade secrets, maybe it's your logo, slogan, whatever it is, that's your intellectual property, and it's the first thing that we should think about legally protecting. So here we've got an example. The Coke bottle is a great example of the different types of intellectual property. So we've got 4 key examples there. And for example, a patent would be the manufacturing process. Confidential information or trade secret might be the recipe of how you make Coke. A trademark or copyright is around that logo and label. And registered design might be the bottle shape. And we'll go through the different types together in a moment too, but that's just to give you a visual example of the different types of IP that exist. And when it comes to protecting IP in Australia, we've got sort of two categories. The first that we can register and the second that we can't. Don't fear, it doesn't mean we can't protect it, and we absolutely should be protecting it. And we'll run through that in a moment. But in terms of legally registering your intellectual property, the three types that you can register in Australia are trademarks. So, your logo, your business name, your slogan, your designs, the registered design of the Coke bottle, and patents being your original ideas and processes. On the other side, which is where a lot of intellectual property sits, which can't be registered, is things like systems and processes, trade secrets, and goodwill. And just because, like I said earlier, just because we can't register it doesn't mean that we shouldn't be protecting it. But the way that we need to protect the latter type of IP is through our contracts. So making sure that anytime you engage a developer or a contractor to work on your intellectual property, making sure that it clearly states that any IP that is developed or created is owned, invested in the business, the company, and also really clearly outlining any work that the co-founders might have created before setting up a company as well. In Australia, the person who created the IP is the owner of the intellectual property, unless it's in a contract or unless that person is employed as an employee. So anyone that falls outside of that employee position, so you've got your developers, contractors, website designers, all of those people that come in and help engage with your intellectual property, really clearly outlining in the contract who owns what and what the process of that will be. And ultimately, the best way that we can protect intellectual property, trade secrets, is on a need-to-know basis and keeping track of who knows and making sure that we've got that locked away. Cool. And so here's some other examples of the importance of intellectual property. So as I've touched on just now, is that copyright laws in Australia automatically protect any idea created by you, and including online businesses. This, of course, making sure that you've got all your contracts sorted and that it clearly states, on your website that the website developer, they've developed this website, the intellectual property vests with the company. And trademarks, registering a trademark can afford you legal rights, permitting your exclusive use of the trademark. And also, here we go at the bottom. If you've got your developer to sign an intellectual property agreement, doesn't have to specifically be an intellectual property agreement, that would normally be included in whatever contract that they were entering, whether it was contractor agreement, design agreement, just really important. Wherever it is, that there's a really clear intellectual property clause within that agreement. Cool. And this is some important considerations about registering a patent. It's a lot harder of a process to register a patent in Australia and can be quite expensive. And there's certain threshold requirements you have to satisfy to be able to qualify for patent registration. So generally requires that the invention must be patentable subject matter, it must be new, it must possess an inventive or innovative step. The invention has to be capable of industrial application, and you cannot have publicly disclosed the invention before you apply for a patent. We've got heaps of great patent lawyers at Lawpath who you can speak to if you think that you've got an idea or innovation that you'd like to register. But an example of a patent that always comes front of mind is the swipe up process on an iPhone to unlock your iPhone. That was registered by Apple as a patent. So it was an original invention, an innovative step that was new. It was capable of industrial application, and it wasn't publicly disclosed before they applied and registered for a patent. Oh, so now that we've covered the company and business structure and intellectual property, we'll move on to reviewing your workplace policies. So especially if you've got employees, contractors, or co-founders, more than one person in the business, basically, having workplace policies is essential, no matter what business you run. So it's a great chance to take review and take stock of what existing policies that you have in place, if any, thinking about if it's time to adopt some new policies, and clarify and reinforce any standards expected of people that are part of your business. So things like maybe over the last year, you've given some of your employees access to a fuel card, or maybe some employees are using company cell phones, making sure that we've got policies around how employees use those and what's expected. So taking check on what policies your business currently have, and maybe what policies, over the last year things have changed that your business needs to introduce. Awesome. And now, as Connor alluded earlier, taking a look at the 2024-2025 federal budget. Now, this is a bit text heavy, but if you read the budget in full, this is not nearly as bad. But we've put three key points here that might be worth considering for your business while you're starting the new financial year. So the first is around the instant asset write-off extension. So the scheme, as part of the new financial year budget, has been extended by 12 months until the 30th of June 2025. So what this means is that small businesses can immediately deduct the full cost of certain assets if you meet certain criteria, being that your annual turnover was less than 10 mil, that your assets cost less than 20,000, and that the asset was first used or installed ready for use by 30 June 2025. The second thing here, we've got setting off tax debts against refunds. So the Commissioner of Tax now has the discretion to avoid using a taxpayer's refund to offset a tax debt owed to the Commissioner. And this applies to individuals, small businesses, and non-for-profits. And finally, the energy bill relief. So small businesses are eligible for a $325 rebate on their 2024-25 energy bills, alongside a $300 rebate for households. And the fourth recommendation we have for taking review of and getting on top of your business for the start of the new financial year is recovering unpaid debts owed to your business. So if you're thinking, and it can be tricky as well, that maybe you early on didn't have great contracts in place or systems to manage, money going in, money going out, but it might be important that you take stock and think about, we've got 4 questions there that you can think about. So have you had any disputes this year? Have you had any uncollected debts? Is it time to reconsider your terms and conditions? And is it time to escalate your bad debts? That third one there, as a lawyer, is really important to me. I often have people coming, especially startups that are growing so fast, which is great, but maybe at the start didn't have the money or time to invest in getting really good terms and conditions. And then time's gone on, grown, entered into these bigger contracts, and we've never taken a chance to make sure that the terms and conditions are really clear, especially around payment and the process for unpaid debts. So if you haven't already taken a look at your terms and conditions or contracts that you have in place regarding payment in the last few months, definitely recommend doing that. It's much better to look now and realize that maybe there's some gaps, rather than being on the other side when you're owed money and realize that you didn't have the correct protections in place to recover those. Cool. So if you do take stock of, and there is debt that's owed to your business, we've got some key steps here for you to include in your debt recovery process. So like we mentioned, checking your contract terms to see when payments were due, contact the customer in writing to request payment if you haven't done already, making sure that you're keeping records of all customer correspondence and key dates, setting up regular payment reminders. If at this point you're still not receiving the owed debts, then you might be starting to thinking about sending a formal letter of demand, which we can help you at Lawpath with if you want to speak to myself or one of the other lawyers. And you might consider hiring a debt collector if the customer still won't pay consider taking legal action. And you can also do a property search on the Personal Property Security Register to recover unpaid goods. But if you do have unpaid debts, especially significantly, I definitely recommend speaking to myself or one of the lawyers in the team, and we can strategize with you on the best approach to recover those. Oh, number 5 for our 5th tip is look into superannuation and review award rates. This is really important because especially with award rates and superannuation each year changing and updating. So just because last year you were really on top of everything and you were 100% sure that you were paying your employees the correct entitlements, it's really important that you take the time to reflect and check if there needs to be any updates made with the new financial year. So this new financial year in regards to superannuation, the ATO is rolling out updates. So the increase to the superannuation guarantee to 11.5%. So making sure that you're keeping on top of that. And same as the award rates. So each year the Fair Work Commission reviews the national minimum wage and minimum pay rates under awards in the annual wage review. So as you can see here, most changes begin on the first full pay period on or after the 1st July. And I certainly recommend, if you haven't already, using the Fair Work Pay and Conditions tool. It's really helpful. I use it all the time. You can use it as an employer or an employee to check what rates might apply and what might be owed, either to yourself as an employee or what owe to your employees. So making sure that you're keeping on top of that, especially as well if you've brought employees on previously at above award rate. So not really keeping an eye on that because you're comfortable that you're satisfied above award and therefore those entitlements aren't owed. Making sure that still with each financial year and making sure that you do a stock take of, the hours worked, what they might have been entitled to under the award, especially with new rates coming through, and making sure that you're still above that if that was the intention, or at the very least paying equal to. Oh, number 6, organize your records. Like I mentioned earlier with the terms and conditions, I think especially in a fast-paced, high-growth startup space, it can be really easy to, blink and 2 years have gone by and there's been so much happening and we haven't taken the time to organize your records, which can create problems down the track. So definitely take the time this new start of financial year to organize your records. We've put some yearly tasks here in a list, some things that you might need to do as a business owner. So for example, a summary of your income and expenses and a profit and loss statement, conducting a stock take, summaries of your record of debits and creditors, collating records of asset purchase and expenditure, and completing and lodging your income tax returns. I'm sure you're all on top of that, but otherwise we've got friendly accountants here at Lawpath that can help you through that to-do list. Cool. Oops, I think that might be flown through that. I think that is our last slide there. So that means we'll have plenty of time for questions. Connor, did you want to jump into the next part, or should we do questions now?
No, I'll just give a quick overview at this point of how Lawpath can help, and then we'll go into the Q&A. But yeah, thanks, Molly. Hope everyone found that really, really informative. Obviously, as I said, if you do have any questions now, please just pop them into that Q&A chat. Molly can address them at the end. It can be something specific to what we've just discussed, but if you've got something else that's kind of weighing on you, please drop that in there as well. I think we'll have time to answer that. To everyone who's actually asking about the slides and the video, we do try to actually send them out in emails after this webinar, but they will also get uploaded onto, the video will get uploaded onto our YouTube page, and you can actually see some of our previous topics that we've discussed at length there as well. If you actually are on our Essentials plan and do have questions about what we've covered in today's sessions, definitely look to upgrade your plan and book in your discovery call with Molly. The purpose of that call fundamentally is just to explore any legal gaps within your business and just take that proactive approach just to ensure nothing that is preventative comes around and caps your business at the knees. The purpose as well is actually provide you with a bit of a roadmap legally moving forward. For example, if you've actually just started your business, or maybe you've had it for a while and you don't yet have that a business plan laid out, you can grab that document from us and actually have that reviewed for this financial year. Similarly, if you're actually also already on our legal advice plan, you should have or will receive a newsletter around a few changes this year legally, but it doesn't hurt to actually just book in a discovery call as well, just to maybe go through any sort of specific changes relevant to your business. And the same as well, if you're on a legal advice plan, if you have questions around superannuation, awards, anything from a more accounting perspective, maybe look to upgrade your subscription, get all your legal accounting under one roof, and get some advice around that. You'll actually see, I don't have their LinkedIn right now, but you'll see we've got some very senior, frankly, overqualified chartered accountants available to assist you this year. And actually, I was thinking, Molly, from the webinar, I mean, everything's important, but the two things that really stood out to me from conversations I've had with business owners, as well as with the lawyers, with the accountants, is the business structuring advice for the legal and tax benefits is always a no-brainer. And actually the workplace policies as well. I think that actually gets really slept on. And I've heard it from a few people where actually not having those in place or having them up to date, you can quickly take to Google and see some horror stories there. They're basically the first line of defense. All right, so just real quickly, then obviously, if you're running a business or you're finding us for the first time, we can actually support you in a myriad of ways. We do provide on-demand legal assistance through the software and through our contract management system. Documents actually have a built-in e-sign feature, so you can send, save, and send out your contracts electronically. We're very much a tech company as much as we are legal and accounting. So if you're actually wondering why our costs are so low by comparison, it's in large part because of that technology. As soon as you actually introduce something online or with software, the convenience of it immediately lowers the cost. I think AI in the last year has been a really good example of that, and actually helped a lot of businesses from their daily calendars or Mile and Xero, for example, which are now using AI in their accounting software. We also incorporate AI as well. Some of the key aspects of that is the Ask Me feature, good for good quick questions, maybe outside of business hours. Gold standard in my mind is always actually speak to a human, speak to a lawyer, but it's good for a bit of a basic run through around a specific legal topic or document you're looking for. There's also a Draft Me feature, so you can actually include additional clauses to your contracts based on what you're doing, and we actually have lawyers with no affiliation to Lawpath whatsoever actually on our essentials plan and using that aspect of AI. So a good indication that it's doing as intended. But in terms of documents, we've got a 500 legal document library, all up to date with Australian legislation. These have been drafted by lawyers, and we actually provide unlimited on-call contract reviews with our lawyers through the platform, and they can take you step by step to any relevant clauses or pages you've highlighted that you want some further advice on, just for a bit of a clarification before you potentially sign anything. Most of our users actually do not have that legal background. Any lawyers and accountants or financial planners are on our essentials. So if you don't have that, if you are unsure of anything, don't sign it. Get yourself informed and book in that consultation. So we actually covered a few topics we actually do cover on the legal advice plan. There is a link in the chat where you can see a few of the common legal sort of topics we are asked on, but it's largely around business structuring, employment, IP, debt recovery, and commercial property law. As I mentioned at the start, if you just joined in a bit late, Molly has extensive experience in a range of topics, and you can click and see a profile there and book in a call with her. But otherwise, you may want to actually book in as well to speak to maybe our accountants on our most comprehensive package. You can actually also get unlimited consultations with them, and our lawyers and accountants actually do liaison with each other. So perfect if you want to optimize and streamline your legal and accounting under one roof. And generally speaking, what people want to really understand there is specific types of tax, really exciting topics around GST, PAYG, crypto, capital gains tax. But I find the real pull is around tax minimization strategies, tax concessions, what they're eligible for, and tax deductibles, actually including our subscriptions. So if you're on our subscriptions and you haven't already, make sure to send your invoice to your accountant or our accountant to get that written off for this year's tax return or last year's tax return, financial year's tax return. They also cover advice again around business structuring or for the tax benefits, a lot around trusts. Molly discussed that a little bit earlier. Reporting, payroll, bookkeeping, and a whole host of other topics. And fundamentally, it's just about knowing steps to save as much as tax and funnel back into your business. We've actually split a lot of our subscriptions now, so you can actually get subscriptions as a standalone offer. Previously, accounting always accompanied the tax compliance, but you can actually now be on the legal advice plan and just get tax compliance by itself. And that's essentially the hands-on work done for you. So that's your BAS lodgements, tax lodgements, and financial statements. And you actually do get special fiscal year consultation in there as well to do a deeper dive into your business. So if there's anyone here who still hasn't done that financial tax return, we can still do that for you. Feel free to reach out and message us to get that sorted for you this year. So for our attendees, we do have a special offer if you're brand new to us. It's 25% off unlimited legal advice. You got the coupon code there. But if you do want to ask us some more questions just to get clarification around what we offer, do type yes actually into the general chat. You can reach me as well on my email there in the chat. And we can also actually take you through a live demo as well. So you can actually see how to use the platform in practice and actually see how easy it is to use as well. All right, that's enough for me for now.